Hey everyone, the mid-March 2026 financial landscape is shifting fast as institutional money pours into prediction markets and regulators tighten the screws on executive accountability. Let's break down 4 stories. Story 1. Prediction market scrutiny. The CFTC just issued a comprehensive advisory checklist for exchanges listing prediction contracts to prevent market manipulation. Major banks are now applying strict insider trading rules to these markets, treating them like traditional derivatives. This follows a billion-dollar boom in contracts tied to geopolitical events. Why does this matter? Brokers must implement real-time surveillance immediately to detect irregular patterns. Failure to act now carries direct institutional liability. Shifting gears to the big players in the interdealer space. Trend 2. TP ICAP strategic milestone. TP ICAP, the world's largest interdealer broker, reported record-breaking revenue of $3.15 billion for the recent fiscal period. The firm also launched a $107 million share buyback program following a 7% growth in profit. This success comes from navigating high credit volatility and active fixed income markets. Even with a slight seasonal dip in institutional FX volumes, the year-on-year trajectory remains positive. This performance signals that diversified revenue streams are the best defense against currency fluctuations. But while profits rise, the regulatory gaze is narrowing on leadership. Big news: FCA executive ban. The UK Financial Conduct Authority issued a definitive ban against a former brokerage CEO over systemic CFD compliance failures. The regulator cited a total failure to oversee risk management and execution transparency for retail clients. This enforcement action follows audits targeting firms that ignored MiFID II standards. It is a massive wake-up call for the industry. Regulatory penalties are increasingly targeting individuals rather than just the corporation. Executives must now proactively audit their compliance culture from the top down. Trend 4. Infrastructure and crypto. Beeks Financial Cloud reported a 7% revenue decline as margins narrowed to 30% during a major infrastructure transition. However, their Exchange Cloud roster grew to 7 venues, with Kraken reaching monthly profitability this March. This trend shows industry leaders are sacrificing short-term margins to secure a dominant position in digital assets. Why is this important? Broker-dealers must now choose between maintaining legacy servers or moving to scalable cloud-native ecosystems. It is a high-stakes bet on multi-asset portfolios. Bottom line, the market is pivoting towards specialized assets and individual accountability as infrastructure costs hit the bottom line. Which trend matters most for your 2026 strategy? Comment below. Follow for weekly insights. Trade smart.